Welcome, dear traders. Interest rates should remain high for as long as possible. This statement was made at the U.S. Federal Reserve meeting. The officials made their decision on November 1. Yesterday, the markets found out the details of the Fed meeting from the minutes. The Fed's hawkish stance reversed the U.S. stock indexes, and this morning it affected some Asia-Pacific stocks. This means that the optimism about interest rate cuts, which has contributed to the rally in the stocks, has been exaggerated. Moreover, it's assumed that the Fed's hawkish policy will remain at a restrictive stance for some time until inflation is clearly moving down sustainably toward the 2% target. That was the anonymous view of the committee. Therefore, the rise of the U.S. currency after the release of the Fed minutes seems quite expected. The U.S. dollar reached its peak on the Fed's hawkish prospects. Yesterday, its rate against the G6 basket counterparts bounced from almost 3 months lows and rose to the peak of 103.70. On the other hand, the effect of the news about interest rate hikes in the United States has already been exhausted, so the greenback needs some more stimulus to continue its rise. It seems to have found it in the Asian trading session. As you can see, the greenback strengthened even more at the beginning of Wednesday, within the intraday range of 103.40 and 103.80. If the bullish momentum continues, the US dollar will continue to move towards the technical resistance level of 103.99. Potential support levels are located at 103.17 and 102.82. It's likely to continue to rise on the back of rising Treasury yields. U.S. Treasuries are competing with the stock market shares. Early Wednesday, yields on a 10-year and a 2-year government bonds remained at elevated levels of 4.4% and 4.8% respectively. In addition, the U.S. dollar's recovery can be explained by the expectations of fresh economic statistics. Today, markets expect reports on initial jobless claims, consumer sentiment, durable goods orders, and preliminary levels of activity in manufacturing and services in the United States. The Japanese currency became an outsider again against the strengthening of the US dollar. During the Asian session, the Japanese currency managed to test the level of 149. However, after the release of the minutes of the U.S. Central Bank, its currency showed insignificant ups and downs. However, a few hours after the opening of the Asian session, the dollar-yen pair began to depreciate and moved up to the 148 and 149.10 range. After disappointing reports on the Japanese economy and domestic deflation, the yen is expected to remain influenced by the greenback. On the other hand, the yen continues to receive some support from fundamental factors. First of all, the Japanese currency is beyond by speculation that the Bank of Japan may change its ultra-loose setting as early as the first half of 2024, before the pair may show a bearish reaction. In this case, it's likely to fall to the support levels of 147.5 and 146.20. The next resistance levels are at 149 and 149.30. Yesterday's hawkish outlook from Australia's central bank and a speech from the Governor Michelle Bullock supported the Australian dollar. As a result, the AUD jumped to 3 months highs and traded at a 0.6590. Today, the Australian currency retreated on the aggressive outlook of the US Central Bank and the strengthening of the US dollar. At the beginning of Wednesday, the AUD dollar pair declined in the range of 0.6520 and 0.6570. In addition, domestic data showed that Australia's leading economic index deteriorated in October. Therefore, the pair is highly likely to remain in the bearish zone. In this case, it's expected that the bearish movement will continue to support at 0.6520 and further to 0.6450. The first significant resistance for the Aussie is located in the area of 0.6580. The Kiwi dollar pair continued its bearish trend today. After the close of the Asian session, the New Zealand dollar continued to fall, testing 0.6020. After that, the Kiwi recovered slightly, but its daily range still gives bearish signals on Wednesday. It continues to decrease within the boundaries of 0.6020 and 0.6060. The pair may also drop to the technical support at 0.6010. The first significant technical resistance is located at 0.6090. By the way, New Zealand launched its national digital currency today, and the NZDD stablecoin is available on the Ethereum blockchain and is backed 1-to-1 to the New Zealand dollar. The stablecoin will allow New Zealanders to optimize their profits within the local currency. That's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below, and see you soon.